Hello everyone, Paul here. Today I'm going to talk about something new. But before I haven't put out a video in a couple of days. I've been kind of under the weather. Don't know what it was, but I had had a lot of sinus things, and I don't know what it was, but it was really controlling my senses, and I wasn't really able to plug up ears, and it made everything in my head all heightened. It was bad. I've never had anything like that before, but I'm slowly getting better. I don't know what it was, but uh, I'm at the when I miss making videos, it's kind of like calling it at work because I want to make videos every day, but when I feel like that, I gotta recover. But anyway, I'm gonna try and get back to it. Try to get a video every day out for you guys. Uh, okay, so with that said, let me just get started and talk about today. I'm going to go into a new topic, and I want to talk about the stock market a little bit. Now, lately, while I was out, I was researching a lot about the stock market and a lot about compounded interest and basically the stock that Warren Buffett went into when he was, I think, 14. I think the story was he was little and uh, made some money off of not like a lemonade stand or something, or did papers. And he took that money and he's been compounding it since he was little. And he was smart enough to know back in the day to, compound his money. And he's been compounding it ever since he was like 14 years old. So that got me thinking. So I thought about what Warren Buffett invested in. And so I looked on Robinhood and I started getting, it's like, all these stocks and things, and I look on Robinhood. I look on Robinhood, and I see the stock which Warren Buffett pretty much invested in was called it was SPY. It was the what's it called, the S&P 500 or something like that. But anyway, it's a stock that covers all pretty much the diversification of a lot of the big companies out there. It covers pretty much Apple, Amazon, Google, Tesla. Uh, what was his name? The guy I was just talking about, what was his name? I forget. I'm pretty bad. I'm tired. But that's his company right there. Health, Microsoft, and Johnson Johnson. Anyway, all the yeah, Warren Buffett. See, I'm still foggy in the head. But anyway, I started looking into things like the calls and the options, and basically what I've been trying to do is what I decided to do is kind of compound my interest with this stock, and I'm focused on just this stock altogether. Now, if we look at my portfolio here, you'll notice that it. I started to put some in recently here. When was this? Okay, it dipped a little when I put some money in, and it dipped right here. Why did it dip? It dipped at some point. When was that? I think it was right here. Anyway, I took some out and I bought. It's a day, week. Anyway, I took some out and then I put some. I saw Bitcoin start. Oh, Bitcoin's gonna go up. Bitcoin's gonna. I've got to put. I took it out, put it in Bitcoin. I saw Bitcoin rise, but then I was down, so then I put it back in. So at this point, that's why there's a little dip somewhere in here. But anyway, uh, my goal here is to compound this specific stock, and then kind of do what Warren Buffett did. Except he had time in his advantage. So what I'm doing is I'm compounding over time and see where this goes. But what I'm also trying to do is I can now do options, and I know what you guys are saying. Options are risky, but I have a strategy in mind, in place, before I even start doing it. For me, I'm waiting for my balance to be around 3,000, and let me explain. Because at 3,000, I won't start doing calls and puts till about 3,000. But let me explain why. Because if you did a call right now, and let's say I did one for tomorrow. Typically, if I did this call for $391, that's basically, I'm predicting that the price of SPY, the S&P 500, is going to be somewhere around $391 at that point in time. Anywhere from that point or after is growth, and you make money based off of that. So if you say you wanted to buy a call, right now that would cost me about $375. So the reason why I'm saving $3,000 is so that I can reserve about 10 times to do calls and puts. And that's kind of my pattern, to have it built up, is to have enough money to cover to do it 10 times. And if I'm right, I'm right. If I'm right, I get gains. So while I'm waiting before I even before my balance gets to 3,000. At 3,000, when it gets to 3,000, that's when I'm going to start. So what I'm doing right now is I'm studying the charts. I write everything down, and I just prepare, and I basically have a strategy in mind, and I use the EMA. And there's a YouTube channel where there's this guy, I don't know his channel, but he talks about kind of like the best strategy in mind is where he has his EMAs for the 13 and the 48. And basically when the yellow line, when the 13 EMA is above the 48, that usually indicates a good possibility that you would make your predictions based off of where it crosses and the nearest candle to that. So right here at this point when I'm showing you, it's, am I on the right one? Oh, I'm on Bitcoin. Hold on. I'm on Bitcoin. Let me go back. Let me go to SPY. I was like, that's too, that climbed. Okay, this is better. But it still works for Bitcoin too, what I'm about to teach you. So anyway, you look at the lines. The 13, when the 13 is above the 48, basically you make your call on that moment that it touches, and the best results is the 5 minute. So right here, I would probably say 375. So when it crosses, that's the number that I would put my call on. I would bet that the price will be somewhere around 375 or above in a week from now. So let's just look at that statistic. Because of the EMA being above the the 48, is the price 375 above? Is it still above? And yeah, that's what it's looking like. Right now it's above. But the 13 EMA and the 48 are closely touching each other. So we'll have to see. But anyway, like I said, I have my own strategy on doing this. And I'm doing this while, Bitcoin is down. So keep me entertained for a while. So anyway, that's my strategy on finding the calls and puts. First, I have to get this to about 3,000 before I even start. And so what I'm doing between now and then, stock market opens tomorrow. So I'm going to make my predictions that if I were to have put let's just make this call right now since it is Sunday. If I were to put a a call in right now, I would say, let's look at the price again. So this is the last time right here when the EMAs touched each other. So that was what, 375. So I put my money on 375, and I would say for tomorrow, if someone's doing a call, that the price will somehow be 375 or above. And if that's the case, then I would be in B Bank. So before I begin, see, I'm still tired, guys. Let's just see if I made that call for 375. I'm gonna do that real quick. See, I do have some more queued for tomorrow. Not a lot, but let's just say I wanted to trade the 375. I think it's gonna go up tomorrow. 375. Well, that's probably... See, a lot of people are making that call already, and that call is expensive right now. So, because a lot of people that are making this call I've already put a lot of the money in. So right now that costs a lot. So you want to get in early when you're making your calls. So if by any chance it does, you can the 500, it's not going to do that. So I would wait on it. I would personally, I'd get in early or wait a little bit longer. Go for this one. Go for the later days. Let's see if that 375 is cheaper. 375. No, it's still pretty expensive. Week out, July 11th, 375. So yeah. Anyway, you gotta do your research. Anyway, but I'll let you guys know when I'm doing this officially. But right now I'm just researching it. So even though before I start doing that, I'm gonna go over my strategy real quick on what I'm gonna do before I even get to doing the calls. What I'm gonna be doing is called the compounding effect, and basically the money that I have in here, I'm just gonna sit in there, gonna let it ride. And what it basically does is, as this increases, I'm going to be cashing out when the price is high. So we see that I've made, because the last day, where's my balance here? Okay. Because I came in the middle of the market on that day, I only made 0.58. I'm pretty sure if I kept my money into the S&P 500 that full day on Friday, that I probably would have made about 1%. So what I'm basically doing is when the price is high, when the S&P is whatever my interest is for the day, my gains, when the price is high, I'll sell, but I won't sell my full balance. I'll only sell the interest of whatever earned that day, and then I'll look for the price to dip a little, and when the price dips a little, I'm going to come back in with the money that I just took out. And that's how I'm going to be compounding this over time. I'm going to be waiting for price to drop and come back in and kind of compound over time. So I'm going to do both. I'm going to do both compounding over time, and I'll do calls eventually. But anyway, I just thought I'd make a video about this to show you where my mindset is on this. I kind of see long term that this is kind of the better option to do right now instead of Bitcoin, because Bitcoin's up and down. I took money out of this, put it in Bitcoin, and then Bitcoin was jumpy, and then I lost like $20. That I'm keeping it in this for now on, and I'm going to be doing this. This doesn't mean I'm banning crypto altogether. It just means that I'm putting my focus more on compounding and growing my wealth with stocks and things like that. While we're in a bear market with crypto and things like that, I'm just going to see where it goes. But anyway, I'll update you guys on this and what happens. I just thought I'd make a video and update you on what's going on. Anyway, if you like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.